Well, there may be even bigger problems for Tesla as it reports cooling sales and the overall EV market is slowing down or showing signs of it. While annual EV sales do continue to grow, the growth rate is dipping, according to Cox Automotive. It says first quarter sales rose 2.6% year over year, but that was far below the 46% growth seen in 2023. My next guest sees a few themes at play here, including China, hybrids, pricing, in what he is calling an EV winter. Joining us now for more is Dan Levy, senior autos analyst at Barclays. Dan, welcome. Good to have you with us. Is the EV market globally too beholden to government policy? In other words, subsidies on the one hand and penalties on the other for cars that don't live up to certain emissions or mileage standards?
Tyler, thank you so much for having me. Look, when we think about what's driving EV penetration, the analogy we've used is, carrots, sticks, and tambourines, right? How do you get a donkey to move? Carrots, sticks, and tambourines. How do you drive EV penetration? Carrots, sticks, and tambourines. The carrots and the sticks are government. And so for the foreseeable future, government is going to play a very critical role in driving that uptake. Certainly from the carrots, whatever incentive subsidies, but also from the regulations. And that's just not going away. Even if it's slowing or it gets pushed out, there is still a regulatory mandate in places like the U.S. and Europe especially.
Do you expect that some of those regulatory mandates having to do with the kinds of cars new cars that can or will be sold in this country by 2035 will be changed? It's hard for me to believe that ultimately no internal combustion engine automobiles, new ones, will be sold in this country in 10 years.
The regulations are definitely fluid, right? We saw that already with EPA plans that were initially put out last year and already revised modestly lower earlier this year. We know that if in November Trump is elected, those regulations probably get softened as well. And certainly anything beyond 2030 is more aspirational more than anything else. So it's going to be fluid. There's a balance between pushing for decarbonization, but also recognizing where consumers are and where automakers are in this journey and the cost considerations for them.
I just want to talk for a moment, Dan, about Tesla losing share. You're seeing it in China. You're seeing it in Europe. You're even seeing it in the U.S. Where does that leave the stock?
Yeah, the fundamentals for Tesla are in a tricky position right now, and we generally expect negative revisions. And part of that is the volume outlook has certainly come down. We're at flat volume this year, and even that, some people would say is going to be tough to achieve. And next year, it's modest volume growth. I think part of the challenge here is that they are relying very heavily on Model 3 and Y. And as good product as they are, there is a model concentration challenge.
Right.
The U.S., it's natural that they're going to see some share erosion, just given how strong a share position they're at, roughly half the market. That's just a function of lack of competition. But Europe and especially China are very competitive. So they'll remain a leader on the EV front, but the competition is tougher and they have a bit of a model concentration challenge.